I've been thinking, what if understanding money was less about numbers and more about psychology? Isn't that fascinating?
Yeah, absolutely. You mean like how our emotions
Hmm.
influence financial decisions?
Exactly. It's like Morgan Housel says in The Psychology of Money, our personal
Right.
experiences and biases shape how we handle money more than we realize.
Oh, yeah. He talks about how everyone's relationship with money is deeply personal and how
Hmm.
luck and risk play huge roles, doesn't he?
Yes, and he emphasizes that building wealth isn't just about how much you make, but how you behave. It's about
Right.
consistency, patience, and understanding that money is emotional.
So true. And that reminds me of Kiyosaki's Rich Dad, Poor Dad, where he
Yeah.
contrasts two mindsets towards money.
Exactly. The idea that financial education is
Right.
crucial and that assets and liabilities aren't just accounting terms, but concepts that impact our financial freedom.
And that wealth mindset he talks about,
Yes,
focusing on building assets rather than just income, that's powerful.
totally. And then Dave Ramsey's Total Money Makeover brings it home with practical steps like building an emergency
Exactly.
fund and eliminating debt. His 7-step plan is so actionable.
Yeah, and the emphasis on discipline and living below
Right.
your means. It's about changing behaviors, not just numbers.
Exactly. And when we move to the basics of investing, authors like William Bernstein and John
Yeah.
Bogle give us the tools to build solid portfolios.
Oh, absolutely. Bernstein's Four Pillars of Investing breaks it down into theory,
Right.
history, psychology, and industry. It's holistic.
Yes. And Bogle's emphasis on index funds and low
Definitely.
costs in the Little Book of Common Sense Investing is game changing. He shows how, over the long term, low cost index funds outperform most active strategies.
It's interesting, though. Don't you think that passive investing might be too simple? I mean,
Well,
what do you think?
I see your point, but Bogle argues that simplicity is an advantage. You're
Hmm,
not
yeah,
trying to beat the market, but capture its returns efficiently.
yeah, I guess overcomplicating can lead to mistakes. And Malkiel's random walk theory supports
Exactly.
that, showing markets are unpredictable. So rather than stock picking, we should focus on diversification and long term investing.
Absolutely. And when we delve into advanced investing, Benjamin Graham's The Intelligent Investor introduces value
Right.
investing and the concept of intrinsic value.
Yeah, and how Warren Buffett built on that with his own approach.
Exactly.
Buffett looks for quality companies at fair prices, not just undervalued ones.
Yes, and his partnership with Charlie
Right.
Munger shifted their focus to businesses with durable competitive advantages.
But do you think the average investor can really emulate Buffett's strategy? That's a
Well,
tough one.
honestly, probably not. It requires significant time and expertise.
True.
So, for most people, sticking to index funds and a diversified portfolio is the way to go.
Right. Keep it simple and focus on long term
Exactly.
goals.
And that brings us to building a portfolio, setting financial goals, understanding risk
Exactly.
tolerance, and allocating assets accordingly. Asset allocation and diversification are key.
And managing risk through regular rebalancing and avoiding
Yes,
common mistakes like emotional decision making.
it's fascinating how the psychology we started talking about comes full
Right.
circle. Emotions play such a big role in investing success.
Absolutely. So, in the end, it's about education, discipline, and patience.
Exactly.
Those are the pillars of investing success.
Well said. And continuous learning, reading these
Definitely.
classic books and staying informed. It's an ongoing journey.
Couldn't agree more. Investing isn't a one time event,
Yes,
it's a lifelong process. And enjoying the journey is part of it.